Welcome to the Wealth Studying Podcast Video Edition. I'm your host, John Pagliano. I'm also the founder and money manager at investablewealth.com. In this episode, I want to talk to you about how international markets are breaking out, how over the past 3 months since the beginning of this year, they've been outperforming United States stocks, and how it's my belief that international stocks have a lot farther to go because they're catching up and they're currently undervalued. And I think over the long run, they're going to outperform U.S. stocks, certainly over the next, say, 3 to 6 to 12 months. I started overweighting my portfolio positions in international stocks at the end of this past year. And incidentally, you can follow all of my stock purchases at my firm's website, investablewealth.com. I blog about any time I buy or sell a stock. You can see in this December 30th, 2016 update, I talked about starting to take contrarian positions, which involved things like moving into international stocks, emerging markets, and healthcare stocks. So let's go over to Yahoo Finance, and I'll do this so you can follow along at home. I've brought up a Vanguard chart of VEU. VEU is the Vanguard total global stock market excluding U.S. companies. So this is a good representation of what the global market looks like if you take out the U.S. And why that's important is that, remember, my premise is that U.S. stocks are overvalued. Now I have a long-term 10-year chart up. Let's plug in the U.S. market. So what we'll do is we'll bring up the S&P 500. Let me compare that. It's going to be in green. So looking back over the last 10 years, you can see that once the U.S. got out of the recession, the market started to go pretty much straight up. That's in terms of the United States, but global markets didn't. They stagnated. The divergence happened right here, somewhere around the end of 2011, the beginning of 2012. That's when U.S. stocks started the rapid ascent forward. So if you go back of the peak of the U.S. stock market prior to the Great Recession, you'll see, right here was the peak, and around the mid to end of 2013, the U.S. got caught up with that old number. You can see, though, the global stocks, to get back to where they were from the recession, they still have a long way to go. So my thesis for 2017 is that eventually international stocks will break out of this trading zone that they're in, and they will eventually start to catch up to the overvalued U.S. stock market. And then even if the U.S. stock market starts to correct, international markets may not suffer as much. In fact, they may continue to rise at the same time. And we'll have to actually see what really happens. So that's my premise, and so far it's working out pretty well. Let's go back and look at this on a short-term chart. Let's look at year-to-date. So over the last 3 months or so, again, the green is U.S. stocks, the black are international stocks. We can see that at the beginning of the year, international stocks started to break out above U.S. stocks. Lately, they've gotten a little bit flat. Actually, both markets had. I think this has to do with another reassessment of energy prices. You see the energy prices are starting to move down. That's going to affect the energy company earnings, which have been projected to be very high this year. I'm skeptical that that's going to happen, so that'll play into the S&P 500 earnings. We are also seeing some of the glitter rub off of the Donald Trump rally as the international stocks, banking stocks, as they start to pull back a little bit. So because of that, we were in a consolidation period, but it looks to me like international stocks are starting to break out. To just show the relevance of that, I'm going to bring in another Vanguard fund. This is VWO, and this is Vanguard's Emerging Market Fund. You can see on this blue line that the international markets have just had a spectacular increase over the last 3 months. Now, full disclosure here, I do own VWO and I do own VEU. I have no intentions on selling them anytime here in the near future. And let me show you why. And let me clean this chart up too. I'm going to get rid of the emerging markets, and I'm going to get rid of the S&P 500. Let's just focus on a long-term chart of the international fund minus U.S. stocks. And let's put in a 12-month moving average. And you can see how well the international markets have been holding up to their 12-month moving average. They fell apart and broke that moving average at the beginning of the financial crisis. They briefly broke above that from around 2010 to 2011, but then stagnation set in. And the market reached a peak in 2014 when energy prices started to collapse. That's capped a cap on global prices. And although I think energy prices are still likely to go lower from where they are right now, I think the global economies have adjusted. That's why we're starting to see the market rise again. This is also propelled by other items such as the strength of the US dollar, which makes foreign products more competitive in the American market. The main part of this chart, though, is to show the personality of the international stocks and how they hold to support on that 12-month moving average. And so I believe the personality of international stocks has now changed. It's gone from trading in a very tight range like we've seen over the last 2 or 3 years to where it's going to start catching up to U.S. equities, and it's going to continue to appreciate. Certainly, there's a lot of political risk, a lot of uncertainty ahead. We have who knows what's going to happen with Donald Trump policies. We have the upcoming election in France with Marine Le Pen. That's April, May this year. And then in the fall, we have the German elections, and we'll see if Merkel can get reelected for another term. The Federal Reserve is raising interest rates. It looks like OPEC is unable to keep the price of oil up. So all of these things, political, the cost of energy, the cost of money, all these uncertainties are yet to play out. I think we have turbulent times ahead, but in any case, I think international markets will outpace the United States stock market one way or the other. Well, that's my story, and I'm sticking with it at least until the next episode or until market conditions change. As always, this is John Pagliano wishing you the very best returns.